Good morning, everyone, and welcome to the European crossover webinar. And we did get some German GDP data that came out a couple hours ago. Came in a little bit better than expected. And French business climate manufacturing pretty much in line, just a tad weaker. And we don't have anything, looks like we don't have anything coming up until, of course, some Mexican retail sales. Let me see, building permits comes in a little bit early. And new home sales at 10 a.m. Eastern. And that's going to be it for here in the States. We did get RBNZ data come out. That was much earlier, came in line. And then take a look, you can see Euro is still standing pretty sturdy here. Yesterday was relatively quiet, just had like a spinning doji here. But we are above that 2159, which is that breakout area. If we can get a close above that, that does open up the door for another leg higher. Although our resistance remains the same, I think if we've got it at 2189. Yesterday, I think the high was 2179. Cable's just crazy. Look at this. I can't even get over this. Dang, even took out 142. Aussie still doing well. Kiwi, wow, looking strong here in the Kiwi. Dollar CAD, we're looking for move down to 25.28. Peso, just a little bit further dip after that solid break a couple of days ago. Dollar yen a little bit stronger. And of course, the dollar index pretty much in the dumps. Just kind of sitting around here. Despite the higher move we've had in rates. Oh, wow, look at this. It could be unless they rolled it over to the June. We also saw a pretty good move here in equities yesterday, which was really just something else. If you look at it, it's kind of strange, though. I mean, we didn't have the kind of move in S&Ps that we had in NASDAQ, but of course it was different because, like I said, it was basically a big technology day. Dow obviously fared better, and but boy, did we come off those lows. We did go in and really dip into some key areas here, rally back. And we'll see how this bar closes, but this is a nice solid close right here just a few moments ago. So we were able to engulf this bar and close above 13,167. So it'll be interesting to see how much further we can push up. Bitcoin has actually held up well overall. I mean, we were kind of sloppy action from 45 up to 49, back to 45, then back up. And I did believe that we could dip down here, but it's holding up. But we'll see how long that will last. The Aussie New Zealand dollars extend the rally, and the RBNZ emphasizes policy patience The Australian New Zealand dollars extended their rapid rally on Wednesday as relatively high local yields drew buyers, and New Zealand Central Bank sounded upbeat on the local economy, even as it signaled rates would stay low. The Aussie climbed to 79.45, its high since February of 2018, and a rise of 2 cents in just 4 sessions. The next chart barriers are 79.88 and 80 cents, ahead of a peak from January at 81.36. The Kiwi reached 73.78, levels not seen since April of 2018. Despite reporting a wave of bids against currencies where central banks were working hard to keep yields low, including the yen, euro, and Swiss francs. Talk of buying from Japanese investors have helped the Aussie to 83.79 yen, the high since 2018, and approaching major resistance at 84. Kiwi's ascent came as the RBNZ kept interest rates at 25 basis points, as expected, and said the economy is strong enough that further stimulus was not necessary for now. Yet the bank also emphasized that it would take a long time to reach its inflation and employment targets, and it was prepared to be patient on policy until then. The RBNZ acknowledged the significant improvement in the outlook, said Jared Kerr, chief economist at Kiwi Bank, but the cash rate is likely to remain unchanged well into next year because the outlook remains highly uncertain. All going well, we expect a rate hike by the end of next year. There had been speculation by the central bank to taper its stimulus in some ways, given the domestic economy is recovering and the housing processes were running hot again. Aussie bonds have also been belted recently, and traders thought the RBA might have support for buying more 3-year bonds on Wednesday, but it skipped the opportunity. That left yields on the paper above the RBA's target of 10 basis points, while futures eased to 99.37.5. Dollar on defensive as risk sentiment improves and Kiwi trail rallies after the RBNZ. The US dollar slipped to 3-year lows against the British pound and antipodean currencies on Wednesday as the promise of extended, easy monetary conditions globally boosted investors' appetite for their riskier assets. The New Zealand dollar dipped briefly before rallying to the highest since April 2018. Federal Reserve Jerome Powell reiterated on Tuesday that interest rates remain low and the Fed will keep buying bonds to support the U.S. economy, which many analysts and investors view as long-term negative factor for the greenback. Money flowed from the safe havens, unlike the dollar, toward currencies that are expected to benefit from a pickup in global trade and to countries like Britain that are bouncing quickly from the coronavirus pandemic. Signs of economic recovery are lifting commodity prices, which in turn supports currencies of commodity exports, such as the Aussie, said Junichi Ishikawa. Risk appetite has improved a lot, and this leaves the dollar at a big disadvantage. The Aussie dollar, which tends to benefit from rising metal and energy prices, jumped to 3-year high of 79.45. The New Zealand dollar rose as high as 73.84. Financial markets have been flirting with the idea that the RBNZ could tighten monetary policy next year. In today's statement, we have discouraged those holding that view, said Westpac analyst Dominic Stevens. Now, the story we just read earlier, they were saying, yeah, next year they will have one. So two different views from two different analysts. The RBNZ wants to see the whites of the eyes of inflation and employment before it shifts monetary policy. The British pound rose 0.3 to 41.58. This is bananas, man. It's unbelievable. The dollar managed to rise against other traditional safe haven currencies such as the yen. The Fed's Powell pushed back against suggestions that loose monetary policy will tend to lead to runaway inflation and financial bubbles, which have emerged as two important worries this year, because there is growing skepticism about the rapid pace of global gains in global stock markets. For economies that have limited disruptions caused by coronavirus outbreak, their central bankers now face questions on when to start tightening policy, which makes the dollar look less attractive, some analysts say. Well, not really a whole lot to go on. There's not much news to speak of. I'm just pulling another news thing just to look here. Well, I guess we can go and move into the analysis. We'll move back to the NQ. It was an interesting rebound here. But if you look here, we're just making a couple of stabs above the 38%. We'll you can see where we're at. This allowed the market to this stab above here. That was going into the close. We were trading relatively quiet, and this stayed quiet. And then we blasted up in here, took out this high by just a few pips, closed back here. That opened the door for us to dip down here. I wasn't awake. Actually, I was pretty worn out mentally, and it was maybe physically pooped after yesterday, after all this trading, trying to stay on top of all this and not get run over. So I didn't, this would have been good. I mean, right here when this closed, you knew that after they even took that high, I would just a little bit open the door for us to go lower. Of course, I was asleep during this part, and then, we're snapping back here. We'll see how we hold up overall. So let's get into the analysis. Oh, Mira said to go and take a look at platinum. Okay, we'll just jump on a platinum right now for you. Bear with me. Here it is on a weekly. We talked about that 1240. Let's take a look how we stand here on the daily. We took that stab, but we've done a pretty good job of staying above this 1240. Right now, that market needs to see if it can get back above 1286 right there. Well, actually, and that's going to be a resistance right there, 1286. Initial, because this is the actual positive close, which is 1283. The old mock snicks. That's 1283. That's 1287. So essentially, between 1283 and 1287, the 1283 was the last positive high close. You can see right there, 1283, and then where we opened a couple of days later was 1287. If we could get a positive close above 1287, then of course it's going to shoot us up. But for right now, short-term basis, 1283 would be your initial. And then if you look on a 2-hour chart, you can see that clears a bell, 1287 right there. They need to get above 1287. But that 1240's held up very well. They came back to test it and doing well today. Let's go on and move into the euro. Euro posted a doji on Tuesday. You can see that here. No changes. The breakout level will remain the same at 21.59. There it is right there. But resistance will remain at 21.89 with support at 29.01. So no changes. You can see that right there. Onto cable. This thing is bananas. Wow. We actually have it on a weekly setup. Let's take a look on a weekly chart. Sheesh. That was actually our resistance, I think, which was this positive close here. I mean, that was going to be our resistance today, and we've just taken that out now. Let's go in. The cable closed higher on Tuesday again. Cable closed above the weekly level of 40.88. Resistance will be the prior weekly close level of 41.53. That's what we're seeing there. Support will be 40.32. So, and we're even above that right now. So it's this level right there. Right there, 41.53. This thing doesn't go anywhere but up. Holy smokes, look at this. This is just crazy. Look at that. From 37, we were here. Market looked like it might be getting a little bit tired here. That could have been construed because it didn't fall back. So you could almost say it'd be construed potentially would have been a hanging man. We have to see how the market reacted. And then we got this move up here. Well, that negated it. Then we had another solid move. Then we add another move. I mean, look at this. This is crazy. This is 137. And look, they had actually dipped down to 135.5. And look, we've already tagged 142. The next closing level is, oh my goodness, is right there at 42.45, and we just did that. Right there. 42, it's 42.41. Holy smokes. Well, we can't ignore that because that's the highest closing level this market has had in a super, super long time. That's the highest closing at 42.41. So that's going to be our resistance. This is plain nuts. And support. A 40.55. Well, that's huge at 42.41. Moving on to Aussie. The Aussie, is there no direction but up? Resistance is a weekly close at 79.50. We got to 79.47. We supported 78.10. Onto the Kiwi. Kiwi closed at a new high again. Resistance remains a zone of 73.52/80. Support will be 72.39. Well, holy smokes. We already got up to 73.89. So the only difference is that it's 80. Although we're above 80. And 72.39 will still remain the support. Dollar CAD. We actually have it on these weekly charts right now. Well, that's a weekly chart, but we have it on the daily. Move back onto the daily. There's a daily. The dollar CAD looks, as Judd Clampett used to say, terrible with a U. Not terrible, but terrible. Support ahead is 25.28 with resistance of 26.57. So our support previously was 25.89. And if we got to close below that, we would open the door for us to challenge 25.28. So that's what we're going with. Support is 26.57. Not support, but resistance. NASDAQ can push up a little bit higher. We're 13.215. We're above that 13.209 right now. Dollar peso. The peso paired back on Tuesday from 2084, closing sub 2050. Resistance on Wednesday would be 2058 with support at 2042. Well, we're just below that, but that's what we're going with. Only time I'd like to vary from that is when it's pretty, I don't say significant, but definitive, like what we saw in the cable. And on top of that, it was actually hit to a prior weekly close, so that was significant why we had updated to that. Other than that, I like to just stick with what I had before. I don't want to just adjust it, which whatever happens to be the high that morning is the resistance. So I like to keep it the same, unless it's something significant, like what we just saw with the cable. And as I said, that 42, was it 42.20 or whatever it is, 42.41 is a weekly close, which is significant. This is really huge here at 42.41. The prior highest weekly close in a long time. I guess we can put an asterisk here just to emphasize how important that one is. And on to the dollar yen. Oh, we're snapping back. So the dollar yen traded in a more subdued range than on Monday, because Monday we saw we'd made a pretty big thud here. We rallied up high and then we turned and fell on its face. Yesterday was more subdued. Resistance on Wednesday will be 555. Well, we're pressing well ahead of that. But once again, we're going to keep it with the same with support at 509. So 555. And I always mention is that the bias chart and resistance isn't necessarily to call the high and the low for the day, which quite often we come pretty close, but to signify where's the key level where we're going to see some battling coming in. And we saw that. And if we get above, as we are above 559, then that means, wow, we're actually starting to look like we're open to breaking higher. So you can see here, getting above this 555, see, that's significant there, which then tells you, okay, that's where we expected to see significant fighting or some offers there. So if we get above that, that really opens the door that we can push even higher. So you want to lend more credence there or keep an eye on something like that. So there we go. Let's go and move into the dollar index. The dollar index closed weaker on Tuesday despite the recent rally in rates. Support will be 89.64 with resistance remaining at 90.42. So I think there's no changes on this. Yeah, only difference was we moved it a little bit lower. So here. And onto the cross. Let's see. The crosses. Wow, look at Kiwi yen. Let's move into a weekly. This 77.50 is key here. Now, the highest weekly close at this point was there at 77.86. We're still parring above there. Problem is that once you get above that part, it could really start to shoot way up here. I don't really see anything of real significance. That weekly closes at 77.86. You see, because next thing it jumps all the way up here. Only thing you can do is go by these wicks. I'm not keen on doing that. That would be the stretch up in here, 78.56. But I'm not seeing any confluence. There's this one wick, but nothing solid here that you can really hang your hat on. They're above the 77.50, so you have to think, and that 77.50 is key, that you're going to try and push these stops a little bit further. I'm just going to go with this wick right there. And that would be 78.35. So let's just go with 78.35 there. Thinking that they're going to try and push it for what it's worth. Support, on the other hand, right there. Oh, they're actually going to be this wick, 77.41. Onto the euro pound. We even dropped as low as, look at that, 85.40. Support's going to be this lower wick right there, 85.56. Resistance for now will be 85.94. Oh, yeah, that's on a 2-hour chart though. Hold on. 86.31. You're on. We finally made it down there to 52.98. Holy smokes. Right to the pip, too. Well, 53.17. We'll still go with the 52.98. That's at weekly level. That remains the same. On the upside is going to be that one right there, 54. If it's 53.99, I'll call 53.98. Next is a Euro Kiwi. Still looking horrible. Only thing that the euro's doing good against is the dollar, and the dollar just sucks. It's just nothing but a dog with fleas. Um, this right here. Yeah, you see this low is confluencing there, 64.58. Resistance will be 65.72. And the Aussie yen, we got new highs there. Looking at a weekly, that's it right there, 84.49. Not even messing around, 84.49. Support's going to be the low right there. Well, it's not. It's going to be that level, which is 83.13. That's amazing how these just keep going higher and higher and higher. There's no let up. Guppy. Right there's going to be 50. That's not even great, but that's the only thing we can point to. $50.17. $49.36 for support. And lastly, starting odd. This is just a hodgepodge right here. Just looks like a mess. Resistance is going to be that close. 79.83. And the low, 78.25. And that will do it for the bias chart. This is huge up here, though, that cable at 42.41. That's the highest weekly close in years and years. And other than that, that's about it. Taking a look at copper, still holding up fairly well. I say you really should be careful trying to take pokes at this until you get past that stimulus. And that's going to be it. And thanks for joining us here on the, Didier said, can you look at crude? Let me take a look here. This one has been interesting too. I myself even was looking at like a short the other day, and the market did run out of gas. Let me put it just like this. That's not allowing the continuation. Hang on. There. Pretty good weekly right here. This weekly close is 63.05, right there on the dot, right there. Let's call this. So it's going to be 63.05. $63.13 actually, which is the high. So that was the best weekly close there. And then looking at it on a daily, $62.12, $62.19. So you don't want to, if you're trying to sell this thing, you wouldn't want it to get back above $62.19, but that'd be on a daily close. And then take a look at a 2-hour. $62.13. Still holding up really well. Still on the buy signal on that 927 on a 2-hour. If we were to cross that, then you can get a short-term sell signal, but hold up really well. But that would be the line of demarcation, 62.14. Okay, well, thanks for joining us here on the European Crossover webinar. We'll see you in the chat room.